Your bank is not a money lender. Their loans department is a money maker, a creator of brand new money. The common understanding is that the bank has other people's money sitting in vaults and accounts, and that when they make a loan, they give you some of this money. In time, you pay it back, plus interest, and the bank has the money to return to its original owner, plus some profit. But your bank does not need other people's money sitting around to make a loan. They just create new money by creating a deposit in their customer's account with the keystrokes of a computer. The only tricky part is when that money has to leave the bank by being transferred or withdrawn. Then it needs to have value that others will accept out in the real world. But isn't money creation the sole privilege of the government, you might ask? Well, the thing is, not all money is created equal. There are two main types of money in the economy, and two different banking systems that operate. There's the everyday private banking system, used by you and me and everyone else. Then there's the central banking system. In Australia, this is enclosed within the Reserve Bank of Australia. The most important type of money is known as high-powered or vertical money, and is created by the central bank, and includes the physical notes and coins, as well as the digital dollars, known as reserves. These digital dollars never leave the collection of accounts at the RBA. They are removed from one account and credited to another as needed. The money in these accounts is known as vertical money, as it moves from the government to licensed banks and back again in payment of taxes and other government charges. Accounts that hold vertical money are called exchange settlement accounts, held mostly by licensed domestic banks, foreign central banks, and the government itself. The other kind of money lives in the digital accounts of everyone else who has an ordinary account in a private bank. It is represented by the numbers that change in your private bank account balance as you get paid or transfer money to someone else. It is often called horizontal money because it moves side to side between bank accounts in the private sector. This private bank money has value because it comes with a promise from the bank to use their vertical money in your name. So when your bank is creating new money, it's creating new horizontal money. This is known as credit money. When you transfer it to an account held at a different bank, or pay your taxes, or withdraw it into physical cash, your bank has to fulfill their promise to use their vertical exchange settlement account money. When they do, your bank's exchange settlement account balance goes down. The important thing to note in all of this is that the bank always guarantees the horizontal money to the customer first, then worries about the vertical money used to clear the payment later. In fact, the majority of the money supply is made up of horizontal credit first created by private banks. What all this means, of course, is that while it is often thought that central banks can control the money supply in circulation, we can now see that this is untrue. It is customers that create the demand for deposits at private banks when they seek a bank loan. And since central banks are primarily concerned with the stability of the payment system, they will always stand ready to ensure the private banks have enough reserves or liquidity to clear their payments. In other words, the central bank has no such control over the money supply. And now that we know banks don't need our money to fund loans, we can see that private banks end up taking very little risk. Their liabilities are financed by the customer as they pay off the principal owing. The bank is simultaneously acquiring an asset that generates income. All the bank has to do is to determine who is a credit-worthy borrower and whether this borrower will be able to service this loan. Economist Hyman Minsky once said, "Everyone can create money. The problem is to get it accepted." Your bank can create money because the bank promises to use their vertical, government-made money when it is needed in exchange for the bank-made horizontal money. There are entities out there that do operate as money lenders, loaning out money that they already have. But our private banks have the ability to operate on a much more powerful and advantageous system. If you enjoyed this video, comment and subscribe below.